What if artificial intelligence could tell you where the S&P 500 is going before anyone else knows? Imagine waking up each morning already knowing whether the US market will rise or fall. Not guessing, not hoping, but predicting through data. Sounds impossible, right? Well, today we're testing exactly that. We used 3 AI-based prediction models on the S&P 500 using real US market data. And the results may change how you think about investing forever. Before we get into the numbers, let's start with the big idea. For decades, traditional analysts have relied on charts, earnings reports, news events, trends, and instincts to predict market performance. But AI doesn't rely on instinct. It learns from tens of thousands of data points at once: price history, trading volume, inflation levels, interest rates, sentiment patterns, volatility gaps, even social media trends. And when we fed this data into machine learning models, something surprising happened. The AI learned how the S&P 500 behaves before big moves. Let me be completely honest. We didn't expect the AI models to perform this well. Most people believe the stock market is a random system. It's emotional, political, unpredictable, and influenced by millions of decisions every minute. And although that's true, AI is proving something different, that hidden patterns exist under the chaos. And machine learning is starting to read those patterns with more precision than humans ever could. Here's how we tested it. We gathered S&P 500 closing price data from January 2020 to December 2024. That's roughly 1,250 trading days. We then built 3 AI prediction models: a long short-term memory neural network, a gradient-boosting regression model, and a sentiment-driven pattern recognition model linked to news headlines. Each model was trained to read price movements and forecast the next day's direction, up or down, green or red. Then we compared the predictions to the actual S&P 500 results. Now listen closely, because here are the results that shocked us. The LSTM model reached approximately 63% directional accuracy. The gradient boosting model hit about 57% accuracy. And the sentiment-based model ended at 52%. If that sounds low to you, consider this. Traditional analysts average around 48% accuracy. Most professional traders can't consistently break 55%. And even Warren Buffett says predicting short-term market movement is almost impossible. Yet, AI crossed the 60% mark. That doesn't guarantee profit, but it proves potential. And it gets better. When we combine the models together, basically letting all 3 vote on direction, the accuracy jumped to around 69%. Think about that for a moment. If someone told you that they could guess the market direction correctly 7 out of 10 days, you'd probably laugh. But that's what the combined AI model did with real historical data. Of course, this doesn't mean you should invest blindly or expect perfect results. Markets evolve. New conditions appear. Inflation shifts. Regulations change. Geopolitics impact volatility. AI isn't magic, it's math. And math reacts to information, not emotion. But even with all the uncertainty, this is still a breakthrough. Let's go deeper into how the AI made decisions. It didn't just look at price charts. It studied volatility bursts, moments where the S&P 500 jumped or dropped sharply. It also learned to recognize consolidation zones where prices move sideways before breaking out. Even more interesting, the AI picked up on pre-breakout signals before large upward movements, small patterns humans rarely notice. For example, in 2023, the market had a quiet upward drift before a major rally. Most people ignored it. I didn't. But here's where things get exciting for everyday investors. Imagine a future where anyone, not just hedge funds, can use AI tools to understand market direction. Imagine an app that updates each morning. AI expects S&P 500 to trend upward today. Or a portfolio tool that automatically reallocates based on machine learning signals. That future is coming fast, and big firms already know it. BlackRock, JP Morgan, Citadel, and Vanguard are using AI aggressively. Wall Street isn't waiting. They're building. They're investing. They're replacing. The question is, will the public catch up? Of course, there are risks. AI can misread data. It can overfit patterns. It can fail during extreme shocks like war, pandemic, or inflation spikes. Human judgment still matters. Strategy matters. Risk management matters. No model can replace common sense. But here's the truth. No one can ignore anymore. The old investing game is changing. Information speed has changed. Market structure has changed. Technology has changed. And now artificial intelligence is stepping into a space that was once controlled by experience and intuition. Now here's the part you might be waiting for. Should you trust AI predictions? The answer isn't yes or no. It depends on how you use them. If you treat AI like a crystal ball, you'll lose. If you treat it like a decision tool, you may unlock an advantage that human traders never had before. The real power of AI isn't prediction, it's probability. It gives you a better chance of being on the right side of the market more often than being wrong. Over time, small edges can make big differences. That's how hedge funds win. That's how algorithms beat humans. And that's how regular investors may soon compete. Before we wrap up, here's something important. If you want us to run these AI models on individual US stocks, Apple, Tesla, Nvidia, Amazon, or on crypto assets like Bitcoin and Ethereum, tell us in the comments. If you want daily or weekly prediction videos for the S&P 500, we'll build a full series. And if you want to learn exactly how these AI models work behind the scenes, step by step, we'll show you everything. The world is entering a new era. Not just AI-powered investing, AI-driven financial intelligence. Whether you believe in it or not, whether you're ready or not, whether you're using it or avoiding it, one fact remains. Artificial intelligence is already here, and the markets are changing because of it. The only question now is simple. Will you adapt? Or will you watch from the outside as others use AI to see what most people cannot see? If you enjoyed this breakdown, make sure to subscribe because in the next video, we are retesting AI predictions on NASDAQ in real time, and the results look even more unbelievable. Stay tuned. The future of finance has already begun.